Hello, traders, and welcome to the market opening preview May 7th, 2015, on a Thursday in the big NFP non-farm payrolls week. Coming down to the end of the week, remember NFP comes out on Friday, 1 hour before the New York stock market opens. Traders, this is brought to you through FXCL Excellence in Trading. Traders, I'm coming to you live from Pattaya, Thailand, where the weather is absolutely gorgeous. It's very hot. The skies are bright blue and the white sandy beaches, and it's just absolutely beautiful out there. Might be heading to the pool for lunch today. We'll see. We'll see how it goes. Traders, if you would, let me just tell you a little bit about myself before we get moving here. I got a lot to talk about. My name is William Gilda, and I've been trading since the year 2006. I retired after a 27-year career in the fire rescue department in 2008. 9 days later, got on a big airplane, headed on over to Thailand for a 3-month holiday to celebrate my 27-year career. And guess what, traders? I'm still here and absolutely loving it. I do trade the markets every day. I'm listening to news, data, I'm watching charts, I'm looking for opportunities with probabilities that are on my side. That gives me a higher percentage of winning my trades. And no, I do not win all my trades, traders. Trust me, I do have losses. That's just part of the game. All right, that's enough about me. Let's get over to the legal stuff. This is the risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, that's the legal stuff. Let's get over to some news and commentary. What happened in the markets yesterday? Indices, US 30 closed negative 0.48%. S&P 500 negative 0.45%. The NASDAQ was negative 0.40%, with the Russell 2000 in the green at 0.42%. Not a bad day there in the old stock market. Heading on over to the Eurozone, the DAX closed green at 0.20%. The FTSE 100 was also up barely at 0.09%. The CAC 40 was up at 0.15%, and the Eurostoxx 50 was positive at 0.32%. Looks like that a good day in the Eurozone. All right, let's go over to Asia. Remember, traders, these countries are currently trading. Yes, the Nikkei 225 is reopened after its 5-day break for a holiday called Golden Week. Anyhow, they are currently negative at 0.01%. The S&P ASX 200 out of Australia is negative 0.73%. The Shanghai is also negative 1.55%, with the Hang Seng also negative at 0.59%. And the Kospi is negative at 1.33%. Let's take a look at today's calendar. See what we have climbing up over there. Today we had some data come out of Australia. Had unemployment change and unemployment rate. It remained at 6.2. However, unemployment change came out worse than expected. And the currency pair moved about 30 pips in the opposite direction, which we would expect with that kind of data. Today we have parliamentary elections in the Eurozone today, so might have a slow day today. We have no other high impact data. In the U.S. session, we have Canada has its building permits month on month, and in the U.S. we have unemployment claims come out today, as they do every week on a Thursday. And that is it, my friends. We really don't have anything. In Asia tomorrow, we do have some news coming out. We have the RBA monetary policy statement coming out tomorrow. So there is stuff going on. Commentary was some of the pairs moved really nice yesterday. Some of them were quite challenging. In other words, you got your entries, but you really had to monitor the trade pretty tightly. But on the whole, I have to say a lot of the trades worked out just fine that we planned yesterday. And we'll go over them in just a second. In fact, why don't we head there right now? Don't have much to say. I expect the markets to slow down today, probably towards New York lunch. Friday being NFP release day in the New York session, I expect us to get some, maybe get some trades early in London, but definitely by 90 minutes, maybe 2 hours into the London session, the markets are just going to clam up and stop, and they'll wait for the NFP release. Happens every time NFP comes out. So let's head on over to some 60-minute Forex charts, and as usual, we will start with the euro dollar. All right, here we go. Just stair-stepping its way along. I have to tell you, this is like a photogenic shot right here. If you want to show somebody what a Forex chart looks like and what you would expect to see in price action, I mean, this is it. It's just going up, give us a pullback, goes up, give us a pullback, and we expect it to continue. So I'm looking for it to give us a pullback to the 1.1296 price level. That's a 618 Fibonacci level. You know what? If it breaks through the 100% line, you have plenty of pips to take it up to that 1467 price area, and I would just take it from there. I mean, there's plenty of pips there. If you don't get the pullback and it just heads up, just grab on, hold, and go for it. But of course, now is not the time to do that. Look at those candles; they look pretty bad. And the 200 exponential moving average is of no concern in this trade. Let's head on over to the pound. Pound was a little choppy yesterday. However, it did give you two opportunities to get into the trade. The first opportunity, if you didn't get out, you probably got stopped out. The second opportunity actually probably would have taken you to a take profit area. Today, we're looking at the 618, for a pullback. Now, we know the pound doesn't like giving us pullbacks. So if it just continues to the upside, we get a bullish candlestick formation. You know what? Just take the trade and place your stop according to your money management technique and what you have planned. But I would like to see this pull back to the 618, and we can just take that all the way back up, and we'll be safe when we hit that 100% area, which if you look left of the chart, is resistance. So we're going to get a bounce there. So I'd rather it pull back, and then we'll take it back up. That's the trade plan for today. And the 200 really has no effect on today's trade. Let's take a look at the Aussie. Now, this screenshot was taken about a half hour before the data was released. So this moved 30 pips to the downside, so it's probably just about at that support level. I want this to break this support, give us a retest, and then we can take this to the downside. Why do we need a retest? Because we don't sell at support, right? We buy at support. So we want it to break support and then come back up and retest that support line, and then we can trade it to the downside because now it's resistance. I'm not sure what this is going to do today. It's done some wild stuff, I have to be honest with you, and it's a bearish pair. If you look at the daily chart, this is the Aussie dollar is bearish, folks. It is absolutely bearish. There's nothing bullish about this. It's had a couple of good days to the upside, and I don't know. I don't like moving my bias once I have it, and my bias from that daily chart is definitely to the bearish side. So we'll see what happens. If we get a bullish candlestick formation, you know what? You can actually put a range on your chart there, and if it breaks the range to the upside, take it to the upside. You got plenty of pips, till you hit resistance, so you'd be safe to get to break even. And that's the name of the game. We want to get to break even. Let's take a look at the Euro Aussie. Euro Aussie is really strange. You see I have a resistance line placed on the chart here, and the reason I did that was because that's where the 200 exponential moving average is on the daily chart. In fact, the candle is like right at the 200, and it's getting rejected there, so I'm expecting this to pull down. And I'm expecting a sell trade here, and we're in our spot. We're just waiting for a bearish candlestick formation. We'll take it down to 40.67. It's almost 200 pips, right? So we have plenty of room. However, I don't want to trade into resistance. I do not want to trade up into resistance. Do you have enough pips? Probably. You probably do have enough pips to take this to the upside, and at resistance, you can see you're going to get rejected. It's going to kick back down. If you look left of the chart, you can see it's been rejected 3 times from this price level. So I really don't want to trade into this resistance level. I'd like to really sell this. I'd like to see this come back down. I'd love to see this come back down and then come all the way back to the 200, and then next week, Monday or Tuesday, we can take this back up. A bounce off that 200 would be really a nice move on there. Take a look at our euro yen. Our euro yen is it's doing its thing. It's still bullish. However, it's at resistance again. Again, I'm not buying here. We sell at resistance and buy at support. So I'm waiting for break of this trend line and let this come back down. Now, there's a couple ways you can do this. If you break the trend line and you bring it back down and you get to that 134.45 area, if you look left of the chart, that support there, it might bounce there, and then you have your buy trade, and then you're staying with the trend and you're going to continue to the upside. However, I'm not buying into this resistance, and my trade plan isn't for that. So I want this trend line to get broken, and I'll be more than happy to sell this euro yen down to the 200 exponential moving average, which would be a wonderful day if that would happen, but I don't think that's going to happen. New Zealand dollar was a mess yesterday. You can see I have a period separators in here. If you look at price action yesterday, this is one of these trades that I said early in the commentary, but where it was really hard to get the entry, and then you had to sit there and manage it. Well, this was the pair I was really talking about, and today's a much better chart. And we're just, we'd like to see this pull back up to the 618 at 0.7532. And we'll just sell this. I really don't want to sell it here. We're very close to support, and I really want to get out of this range. I'll be honest with you. This is a pretty nasty range. You really don't know what it's going to do. So I'd like this to pull up, clear this range, and then come back through it again. I think that's probably the safest trade. And traders, that wraps up all 6 currency pairs. Traders, on behalf of myself, William Gilday, and our great friends at FXCL, Excellence in Trading, please visit us at fxclearing.com for your trading solutions. Traders, have a great trading day, and remember to trade smart and not hard. Traders, till next time, see you later, take care, bye-bye.